Okay, so we're going to talk about how to find quality trades and how to sort of increase your win rate using supply and demand. So whenever you're trading supply and demand, you're basically trading from a price zone or a level, an area. It's not an actual, an actual line. It's an area, a zone you want to trade from. And there are a few factors that you need to look at to determine whether the zone is tradable and whether it's a good zone. So number one is trend. Number two is the location of the zone. Number three is does the zone result in a break of structure? And number four is there a fair value gap? So we'll get stuck into it. As you can see, I had a zone marked out this morning from EU. Now, price never came back and hit it, but this zone met all of the criteria. Price broke out of the zone and broke a recent level of structure. Our recent level of structure was here. It broke this recent level of structure and it closed above it. Now, the important thing for my strategy, the way I trade, is when it breaks the recent level of structure, there can't be a stall in price before it breaks it. And what I mean by that is if we get the paintbrush, let's say we're just looking at today here, sort of, we'll go roughly. So let's say we're like this, and with an area there, price drops, massive momentum candle here. Okay, now let's say that. So there's your level of structure. Okay, and we're going to have to color these candles in, so bear with me. Okay, so there was, as you can see, there was no red candles before the zone was broken, so it was basically green candle, green candle. But if price went like this, if price was going up, sort of, I will draw the same sort of setup, momentum candle, and then you had a stall, and then a break of the structure. So essentially, this stall would invalidate the setup for me. I like it to be basically green and no stalls. So here's your level of structure at these highs. Price went up. Give you your momentum candle here. Let's just pretend this candle here is our momentum candle. Same with here. That's our momentum candle. This setup here qualifies. This setup here does not qualify. There was a stall in price before it broke the recent level of structure, the most recent level of structure. There was a stall in price with this red candle that invalidates our zone. Even if this red candle broke the high, like so, that still invalidates our zone. Price here broke the zone with the green candle, no stalls in between, and it closed above the zone. Price closed above the zone, so that's important. Okay, so that's the number one thing. Your zone and the way price breaks the most recent level of structure. So you can see here, here's your most recent level of structure, like I just pointed out a wee second ago. Here, price, bam, broke above it, green candle, green candle, green candle, didn't give any sort of stalls before it broke it. Okay. Number two is fair value gap. So a fair value gap on this setup, or on this particular zone here, we have a fair value gap from this red line to this red line. What I mean by a fair value gap is, I'll try and draw it. Does price interact? I'll draw it. I'll draw it. So let's say we're going down again, we're going down, and then we get a massive momentum candle and a break of structure. Okay, right. So here's our break of structure here. Let's just say price. We're looking for buy signals, okay? We're looking for buy signals. So let's just say this is our momentum candle. Just gonna have to color this all in. Okay, so here's our momentum candle here. Here's our break of structure with this candle here, and here's our next candle. So The way we see a fair value gap, let's just say prices like that, and there's a bit of a wick here, a bit of a wick here, a bit of a wick here, right? So we're focusing on these three candles here, okay? Candle one, candle two, candle three, okay? So you can see from this level here, this level here, no wicks have interacted. There's no wicks at all within this box, okay? No wicks at all within this box, all right? If we're going to have to get rid of this bloody hell. I want to get rid of this what do you call it, line here, because that's confusing the whole thing. Okay, so as you can see, if we have a wick like for fuck's sake, like I had just drawn, a wick from here, we'll just draw a wick up here, draw a wick here, we'll draw a wick here. As you can see, no wicks from these three candles, one, two, three, no wicks interact in this area whatsoever. That is our fair value gap. Okay, let's say price came down to here. Our fair value gap is now here. Let's say price, this happened. Price went up like that. Our fair value gap is now here. Okay, so hopefully you understand fair value gap and how to identify one. Now, the important thing about the fair value gap is the fair value gap must be close to the zone, if not at the zone. So as you can see here, here's our fair value gap, and it is just a small bit away from the zone. Now, if the fair value gap was way up here, then I would be hesitant as to take that setup. The fair value gap is too far away from the zone. If price came down through the fair value gap, the reason you're using the fair value gap is because price is a reason to pull back into that fair value gap. If price pulls back into the fair value gap and it continues on down into the zone, whenever the fair value gap is far away like this, then that's a possibility that it's possibly price is going to go through the base of your zone and stop you out. So the fair value gap being as close to the zone as possible is the second thing. I don't even know if it's the second thing or not, but I've confused myself, I've lost count. But let's go to gold. We took a trade in gold this morning, so you can see a few different zones marked out. I'll just sort these out. So whenever we come on to gold this morning, I identified the zone, which was from here. This is the zone, this candle, to this candle. Okay, so the zone directly resulted in a break of structure without a stall. Here's our level of structure. Our most recent level of structure is over here. The zone resulted in a break of structure without a stall. It closed above our most recent level of structure, and there was a price gap right at the zone. So if you can see, there is a price gap from the low of the wick of this red candle to here. We have a price gap, a very small price gap, but it's still a price gap. Okay, so now price came and touched into the gap or into the zone here. We weren't triggered. Again, tapped the zone. We weren't triggered. Again, into the zone. Not triggered. Not triggered. And then bam, we were triggered. It was by this candle. We were triggered by this candle here, and my profit target. Well, I think I was just out at the very, 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 very sort of high 261. Yeah, up around here. So that's an example of a good zone. Another zone, we had another zone on gold this morning. Gold actually made good bank today. So I'll let you see if you can actually pick it up first. Obviously, my indicator is highlighting it. So here we have another momentum candle here. We have a recent level of structure here. Okay, this red candle, the high of this red candle is a recent level of structure. So our zone is marked out from the low here of the low of this green candle in this case to the high of the red candle. The zone clearly resulted in a break of structure. Closed above the most recent level of structure. There was no stalling between the break of structure and the initial takeoff from the zone. And there's a fair value gap. So our fair value gap is from the top line here, from this red line right up until here. Now you can see price went on up, came back down, filled the fair value gap, came down into the zone. We were triggered at the break of the high of this red candle, and we were targeted. I think my profit target was up around here again somewhere. So it was two trades this morning on gold, basically back to back, which was brilliant. Perfect setups. Okay. Now, these setups are going with the trend. They're from a zone with a break of structure without a stall, and they have a price gap. Now, I'm not saying that this setup is going to win every single time, because that would be bullshit. It's not, but it greatly increases your chances of getting winning trades. Greatly does. So, as you can see here, we have another zone. Okay. Now, this zone, you wouldn't actually have been triggered. I actually packed in trading by about then today. Texted me and says, "Fuck it, I'm done for the day." But our zone was from here to here, and we had a break of structure without stalling. There was a fair value gap from here, from the high of this red candle to the low of this green candle. So we had a fair value gap in here. Price came down into the zone, tapped the zone, but we weren't triggered. Bam, broke on through the zone. That's the zone invalid. So hopefully that gives you a bit of an understanding as to how to identify high quality zones and sort of make trades from them. You want the zone, like I've just said, I'll say it again, to have a break of structure without a stall in price, have a price gap, and be within a trend. Okay, so I don't think there's anything missing. I really don't think there's anything missing. Oh, one other wee thing. Sometimes if you can pick up a zone just as there's a trend reversal, so you'll possibly get a head and shoulders or some sort of reversal pattern. So price, could be bam dropping down. You get sort of this type of pattern here. If you can actually pick up um if you can pick up a zone in around this area here, you can get fucking good rewards out of that. Now, you have to be careful. You have to really understand what you're doing. So obviously here has broken. You have break a structure here and here. You have a higher low. You have a higher high. You need to be aware. It's risky. It's risky, is what I'm saying. You need to be aware of market structure, and also be aware of these sort of price patterns, head and shoulders. Sometimes you get diamond patterns, double bottoms, double tops. Sometimes you can get inverse head and shoulders. So you would get this sort of shit here, and then both price would fucking rocket on up. Normally, whenever price goes up, you won't be trading off the sort of the neckline area of any of these patterns. So, around this area, even for a double top, you want to be trading off the neckline. So price goes up, tops, bam, up, down. You just don't want to be trading. You just don't want to be saying, right, there's a double top, we'll take it on down, because typically what happens is price will go on down, but then it'll come back up. So you want to always be trading off the sort of the neckline area. And whenever I say area, it's not exact. That's it's not exactly off that area. I've seen where price possibly, you know, only comes back up to here, and you get a good signal. Sometimes price will come on back up to here, you'll get a signal. So it's a neckline area. It's the same as a head and shoulders pattern. You want to be trading off the neckline, so off this sort of area here, or even down around here. If price breaks this low here, I normally would say the pattern is invalid, and you could either be going for like a double bottom sort of pattern, or a continuation downwards. But yeah, those are a few wee tricks I've picked up along the way. So hopefully this video gives you a bit of an understanding on how to identify good zones and possibly increase your win rate. So If this video was helpful, you should subscribe and like it, and I'll do more like it in the future. Thank you.